Strong competition and excess capacity have challenged the profitability of South and Southeastern Asia reinsurance markets for many years. Here to discuss how they performed in 2021 as part of a new AM Best report is Kanika Thukral, Senior Financial Analyst, AM Best. And Kanika, how did South and Southeast Asia reinsurers perform in 2021?
So, John, in 2021, the underwriting performance of domestic reinsurers in South and Southeast Asian region improved, but return on equity declined due to weakened investment returns. So let's first talk about the underwriting performance. Overall, the segment continued to report underwriting losses. However, the combined ratio of the segment declined compared to 2020, driven by improved loss experience of both the attritional and natural catastrophe claims during the year. The attritional loss experience of the region's primary insurance markets improved in 2020 and 2021 due to a decline in travel, motor, and workers' compensation claims, largely attributed to the lockdown restrictions during the pandemic. So not only did the reinsurers in the region benefit from the performance of these lines, but they also experienced a negligible to manageable impact from COVID-19 related business interruption claims. So interestingly, most reinsurers in Asia had already incorporated business interruption exclusions in policy wordings following the 2003 SARS outbreak. So, however, the benefit from these lines was in part offset by higher frequency and severity of health claims observed in several countries, particularly in Thailand and India, due to the highly transmissible waves of COVID-19 emerging during the year.
Did the region see above average catastrophe losses last year?
So moving on to the natural catastrophe losses, 2021 was a manageable year for South and Southeast Asian reinsurers, given the measures they had taken in recent years to manage down exposures. After elevated loss incidents in 2018 and 2019, largely from the Japanese and global cats, many reinsurers in the region have reduced the capacity provided to cat-exposed business and have heavily relied on retrocession to protect underwriting profitability. The market also saw significant rate increases on loss-impacted accounts during the 2021 renewal seasons. So given these measures, the region's reinsurance participants were not materially impacted by significant events in 2021, such as the Tohoku earthquake and the Henan floods. So this was more about the underwriting performance and the factors which led to an improvement of the underwriting metrics. Moving on to the investment performance, 2021 was a challenging year due to the low investment yields amid a prolonged low interest rate environment in most countries in the region. As a result, the overall operating performance weakened, driving a lower return on equity in 2021 despite contraction of underwriting losses.
Now, given the inflation conditions and volatile capital markets, do they think they can sustain this underwriting trend?
Oh, that's a good question. So in my opinion, rising inflation in the region is likely to pose a challenge in sustaining the improvement trend observed in the underwriting performance over 2020 and 2021. Although I expect the social inflation to have a low impact on the region's reinsurers, their non-life portfolios are largely exposed to the increase in claim severity due to a rise in wages, repair costs, and medical inflation. Although these impacts are likely to be managed through rate increases by both the primary insurers and reinsurers, the impact on long-tail business lines may be more pronounced, with persistent inflation leading to reserve deficiencies. In general, I think the management teams of these reinsurers are aware of the challenges posed by the inflation and will be able to take steps to mitigate its impact on the underwriting performance. Some of these steps, I imagine, would include strengthening expense management, as well as maintaining disciplined underwriting, pricing, and reserving.
Kanika, what's the dynamic between local and international reinsurers in these markets? And are you seeing any shifts there?
Yes. So to answer the first part of the question on the dynamics, the reinsurance participants in South and Southeast Asian can broadly be categorized into domestic players, regionally domiciled reinsurers, and international reinsurers providing external capacity or operating in the region via subsidiaries or branches. With respect to domestic reinsurers, some of the participants in the region have been established to support government mandates to offer reinsurance capacity in their domicile country or to aid in local risk retention. Typically, such players benefit from obligatory cessions, as seen in markets such as India, Philippines, Malaysia, Indonesia, and Nepal. And in some cases, domestic players also benefit from access to preferential business by harnessing their local relationships. So over recent years, we have seen significant capacity deployment by international players in the region as well. However, the value proposition of international players differs from that of the domestic players in terms of size of risk covered and product offerings. The regional players have a relatively smaller capacity to offer and hence have smaller shares in larger risks. By comparison, foreign reinsurers typically provide capacity to large risks and enable the management of catastrophe risks in Southeast Asian region. These players remain crucial to support the coverage of large property, engineering, and marine risks in the region. International participants also cultivate a greater level of sophistication in the manner reinsurance risks are managed and can support the use of alternative reinsurance structures. However, the regional players remain as more traditional reinsurance players. And also to answer the second part of your question on the shift in dynamics, we have seen that the level of compulsory cessions has gradually reduced over the years in many markets, creating a more level playing field and allowing for the participation of regional and foreign reinsurers. Most recently, in 2022, the Indian insurance regulator reduced the obligatory cession for general insurance business to the domestic reinsurer by 1%.
Thanks, Kanika.
Thank you, John. My pleasure.
That was Kanika Thukral, Senior Financial Analyst, AM Best. And I'm John Weber for AM Best TV.